Moving on now to the U.S., where stock index futures posted solid gains ahead of Monday's open, boosted by the strong performance seen in international markets. Around 5:30 a.m. Eastern Time, Dow futures indicated a bounce of about 240 points at the open. The Nasdaq and the S&P 500 futures also indicated a positive start to Monday's session for their respective markets. The moves in pre-market trade come after Wall Street closed sharply down on Friday, while concerns over a potential trade war continue to rattle investors. A positive trading day for markets in Europe and Asia helped lift sentiment in the U.S. on Monday, with no major data or earnings due out on Monday. Now, investors in the U.S. are likely to still be keeping an eye on trade tensions. And in Asia, stocks closed higher today as markets shrugged off declines seen on Wall Street after a week largely dominated by U.S.-China trade development. The Nikkei 225 edged up by 0.51% after mostly directional less trade in the morning. Now, South Korea's Kospi advanced to 0.6%. Greater China markets were also buoyant. Hong Kong's Hang Seng Index rose 1.35%, outperforming its regional peers as technology and financial stocks put in strong showings ahead of the market close. On the mainland, the Shanghai Composite rose 0.26% and the Shenzhen Composite held above the flat line to close 0.01% higher at 1,831 points. Meanwhile, Australia's S&P ASX 200 rose 0.35%. And back here in Africa, government officials from Ghana will meet investors in Japan this week as the West African nation seeks to diversify its range of sovereign bond holders. Ghana, which exports cocoa, gold and oil, plans to issue up to $2.5 billion of sovereign debt, including a $1 billion Eurobond by the end of this month. Finance Minister Ken Ofori-Atta has previously said he's weighing the option of issuing a yen-denominated samurai bond. He and other officials, including a deputy governor of the central bank, will travel to Japan. The officials will also meet with the Japan Bank for International Cooperation during the April 9 to 14 trip. Africa has seen a rush to market by governments seeking to issue bonds ahead of anticipated Federal Reserve interest rate increases. Nigeria, Kenya, Senegal and Ghana's neighbor Ivory Coast have all issued foreign currency bonds this year, though none tapped Asian markets. And Egypt has given initial price guidance for its planned euro-denominated bond in the low 5% area for an 8-year tranche and in the 6% area for a 12-year tranche. Egypt, rated B3 by Moody's, B- by S&P and B by Fitch, has mandated banker IMI, BNP Paribas, Deutsche Bank and Standard Chartered Bank to arrange the transaction. The planned issue will be the first euro-denominated public debt sale by Egypt. And Zambia is facing tough questions over its foreign debt levels from investors who think the real number may be more than double what the government says it is. Our lenders, including Nomura Holdings Incorporated, believe the state hasn't come completely clean on how much external borrowing it's undertaking. This is raising concerns the southern African nation may be headed for a similar situation to neighboring Mozambique, where hidden debts led to default and the government is seeking to restructure. For Zambia, Africa's second biggest copper producer, external debt is key. It's been the main stumbling block in sealing a $1.3 billion loan from the International Monetary Fund. It needs to bolster foreign exchange reserves that fell to a 7-year low in November. The government has been on an infrastructure spending spree over the past 5 years that has seen external loans soar to $8.7 billion at the end of December from $2 billion in 2011. And Barclays Africa Group Limited, South Africa's third biggest bank, says the group will be split into retail and business banking, investment banking, the rest of Africa and wealth and insurance. Barclays Africa is splitting its business away from its former parent company in a process that began in 2016 and is scheduled for completion by early 2021. The UK bank paid the South African lender £765 million for the separation. The move has meant that Barclays Africa is free to set its own strategy for growth in South Africa and on the rest of the continent, where it has operations in more than 10 countries. And a South Africa cement maker PPC Limited is weighing expansion into new markets as it seeks to draw a line under a tumultuous 2 years that included an emergency rights issue and takeover interest from competitors. And since taking the top job in July, Chief Executive Officer Johan Claassen has reviewed the company's operations and balance sheet with a particular focus on boosting liquidity and extending debt maturity. New investment will follow a 12 billion rand outlay on 5 plants in the past half-decade, which took PPC into countries including Ethiopia and the Democratic Republic of Congo from its South African base. East Africa is a particularly fast-growing region, while an abundance of projects in Ivory Coast implies a high demand for cement in the West African country. We'll take a break, and when we return, Ukrainian government moves to boost trade relations with Nigeria. To stay with us.